Please get ready for the passage. Mr. Deputy Chairman, sir, I beg to move that the bill to give effect to the financial proposals of the central government for the financial year 2010-11 as passed by Lok Sabha be taken into consideration. Sir, the finance bill was introduced on 26th February 2010 when I presented the budget proposals in the other house and subsequently I laid the papers on the table of this house. The budgetary exercise is a long drawn process, and with the disposal of this item, the almost 9-week long budgetary exercise will come to an end. I would not like to make a long speech about the various features of the finance bill. But I would like to bring to your notice certain aspects which are important and relevant. Sir, when we introduce the finance bill, it is a normal practice that we receive a large number of suggestions, views, and comments from different stakeholders, and it is possible in a budgetary exercise like ours, particularly when the direct tax is so complex that certain proposals affect certain sections, certain unintended benefits are accrued to some sections, and certain unintended hardships are also mitigated in the case of some other sections. Therefore, the time which we utilize between the presentation of the budget and the introduction of the finance bill, and when this is finally disposed of in that house, we receive various representations, suggestions, comments, etc., and we consider them deeply. With those considerations, I have made certain suggestions. The honorable members would find that there are differences in certain sections and certain areas. In the fitness of things, I should explain to this House why I have introduced those and why I am suggesting them to be considered by this House. Both in the direct taxes and in the indirect taxes, there have been certain changes. After that, I would like to respond to the honorable members about the general state of economy, the subsequent developments and its impact on the budget, and how do we look at the outcome for the year under review. Surely the honorable members would make their observations, and I will try to respond to some of them. In the introductory stage, I would like to confine myself only to those changes which have been brought in the finance bill. First, I would like to talk about direct taxes, then service taxes, and thereafter indirect taxes. While introducing the Finance Bill 2010, in respect of direct taxes, emphasis has been on relief to individual taxpayers, encouraging research and development in the country, providing some relief measures in view of the recessionary impact, and rationalization of procedure and steps to mitigate compliance cost. Based on the discussions and representations received after the introduction of the finance bill, certain further reliefs and concessions on direct taxes are proposed. Availability of modern hospitals is a priority area for the country, and private sector participation is desirable in order to provide better healthcare facilities to citizens. Currently, hospitals of more than 100 bed capacity constructed in any area other than the excluded area are eligible for claiming 100% deduction under Section 80 of the Income Tax Act. Considering the pressing need for more hospitals all over the country, it is proposed to include the business of a new hospital anywhere in India with at least 100 beds for patients as a specified business for availing the benefit of investment linked deduction. Another priority of the government is to make India slum free. The Ministry of Housing and Urban Poverty Alleviation has issued draft guidelines for slum free city planning. The Rajiv Awas Yojana for slum dwellers and urban poor envisages slum-free India by encouraging states or union territories to tackle the problem of slums in a definitive manner. For this purpose, it is proposed to also include the business of developing and building a housing project under a scheme for slum redevelopment or rehabilitation framed by the central government or a state government as a specified business for availing the benefit of investment linked deduction. Mr. Vice Chairman, sir, ever since I proposed imposition of service tax on international and domestic air passengers in this budget this year, I have received a number of representations expressing concern that this levy would adversely affect the civil aviation sector and would make air travel expensive. I would like to clarify that it would not be so. The effective rates of levy when they come into effect would be a maximum of rupees 100 per travel for domestic journey in any class and a maximum of rupees 500 per travel for international journey by economy class. Further, domestic air travel to and from the northeastern sector would be exempt even from this moderate tax. Then the construction sector has requested for a review of changes in the service tax law proposed in this year's budget. Several suggestions have been made by the trade associations and various stakeholders.